July is usually my worst month for dividends. As you can see from this graph, in July of 2022 I received £310, and in July of 2023 I received £305. Can I do better this July? In this video I'll reveal all my passive income this month from both share dividends and premium bond prizes. And if you stay to the end, I'll reveal everything I've been buying and selling in the month of July, including a new ETF I've bought for the very first time. For the last 15 years, I've been drip feeding spare money each month into dividend paying shares, and more recently into a range of exchange traded funds. By generating multiple streams of passive income, my essential bills could still be paid if I were to ever lose my job. As I make good use of a stocks and shares ISA, my passive income is all tax-free. This is not investment advice, and I'm simply showing you my own journey. On the 12th of July, I received some cash from the house builder Persimmon. It's a company I've only recently started buying again, after having sold them around 10 years ago. The share price is up 8.9% this year, and a dividend yield is 4% spread over 2 payments. The Labour government has plans to build 1.5 million new homes, and house builders such as Persimmon should benefit from this. So could now be the time to snap up some house builder shares? I'll let you decide. This screen shows how the dividend payments have changed from year to year. The house building sector is cyclical, so expect some volatility in both share price and dividends. This month Persimmon paid out a total of £15. If you want to know how much I hold in each company mentioned, then I've listed the totals in the video description. On the 13th I received my first ever dividend from Experian. This company specialises in credit reporting, data analytics and fraud prevention services. In a new world of big data and AI, Experian is well placed to grow. The shares are up 9.5% this year. There is a dividend of 1.4% spread over 2 payments. As you can see here, Experian has a pretty good track record of growing the dividends. Shares bought in 2006 would pay you just over 10 pence a share for the year, but those same shares today would be paying you over 40 pence per share in a year. This month, Experian paid out a total of £35. Also on the 13th, it was the turn of GSK to reward its shareholders. GSK is a global pharmaceutical giant specialising in a wide range of medicines. It is the 10th largest pharmaceutical company in the world. The shares are up slightly this year at 2.8%. GSK is a quarterly dividend payer. The yearly yield at the time of this video is 3.9%. I've held GSK for well over a decade. Whatever the state of the economy, medicines are an essential purchase for many. Annual dividends look fairly robust. A couple of years ago, GSK spun off its consumer healthcare division as a separate business, and it is therefore a smaller and more streamlined company. This month, GSK paid out a total of £160. Just a reminder that Trading 212 are giving away a free share worth up to £100 to anyone who opens an account with them. Just click on the link in the video description and you can start your own dividend journey like I have. On the 19th, I received a payout from National Grid. NG is a UK's 13th largest company by capitalisation. It owns and operates electricity and natural gas transmission networks in the UK and also abroad. National Grid is a great example of a company with an economic moat. In simple terms, it is a virtual monopoly. It would be almost impossible for a competitor to suddenly start building pylons across the country, as the infrastructure is already in place and owned by National Grid. The shares are more or less unchanged this year, but as you can see here, there was a huge share price crash at the end of May. This happened when National Grid suddenly and unexpectedly announced a rights issue. Simply speaking, they asked their shareholders for more money. This was not because the company was in trouble, it was for modernising and upgrading its infrastructure. Well, with all those electric cars these days, increasing demand for electricity, it's not surprising that something has to be done. Not only did I take up the rights issue, I also bought more shares on the open market, putting in nearly £5,000 in total. This meant selling some AstraZeneca shares to fund the purchases, but it seems to be paying off. Dividends have been steadily increasing. A company that consistently raises its dividend year after year is usually a very good sign indeed. I've held National Grid shares for 14 years, and in that time not only has the share price increased, but they have paid out dividends totalling £7,474. This month National Grid paid out a not too shabby dividend of £650. And now for the monthly premium bond draw. The prize rate is currently 4.4%. There is one draw a month, you have easy access to your money, and there is a chance to win £1 million each month. All winnings are tax-free. The first £1 million winner this July was based in Outer London and held a total of £24,000 in bonds. The second lucky winner was based in Devon with a total holding of £30,000 in premium bonds. So you don't have to hold the full amount to win the big one, although it certainly helps. I use premium bonds as my emergency fund, kept out of the stock market on purpose, so hopefully I never have to sell my shares and can allow them to compound over time. No £1 million prize for me this month. In fact, I won absolutely nothing. With premium bonds, payments are not guaranteed. In the past, I've gone several months in a row without winning a thing. It's all the luck of the draw. The bar on the left shows what I would have expected to win so far this year with the full amount invested and average luck. The bar on the right shows what I've actually won. We are well behind this year, and it will be interesting to see if this changes in the latter half of the year. Why not subscribe to follow the journey? Last year's premium bond results were so much better. The expected return for 2023 was £1,900, but what I actually achieved was £3,075. I'm getting nothing like this return in 2024, but as I say, I don't really mind as premium bonds are just kept as my emergency fund. And now for the July overall passive income summary. The green bars on this graph show my passive income for the first 7 months of last year, and the blue bars are for this year. The total for this July was £860. This graph shows average monthly share dividends since I started my journey in 2009. This does not include premium bonds and is only share dividends. I find it so motivating seeing these bars go up year after year. In 2009, when I started, I was receiving just £8 a month in share dividends. At the time of this video, I'm now receiving an average of £1,353 a month, and it's all tax-free. I'll shortly be revealing everything I've been buying and selling this July, including that new ETF I've bought for the very first time. But first, a quick look at the FTSE 100 ex-dividend dates for the month ahead. There are simply so many companies going ex-div in August, I'll need 2 slides to show them all. There are 31 in total, and here is the second screen. If you own the shares before the ex-dividend date, then you are entitled to the dividend, which will be paid to you on the payment date. As an example, I own shares in Barclays, which go ex-div on the 15th of August, and I'll receive 2.9 pence for every share held, and this will be paid to me on the 20th of September. And here are all the payment dates for August. I'll be receiving dividends from United Utilities and British American Tobacco. This screen shows the highest yields, with Vodafone leading the way at 11%. However, you can see it's in red, which means there has been a dividend cut and it's falling to 5.5%. With very high yields, there tends to be more risk of a dividend cut. Burberry and Rio Tinto have also experienced cuts to their dividends. This is why chasing high yields can be very risky. Often when a dividend cut is announced, their share price falls too as investors become worried. The average yield of the entire FTSE 100 is currently 3.6%, and my own portfolio is actually lower at 3.3%, but my yield on cost is now 6.2%. That's the dividend yield I'm receiving on the total amount of money I've drip-fed in since the start. Remember, many companies have a track record of raising their dividends each year. For example, just a couple of weeks ago, BP announced it is raising its dividend by 10%. I've held BP for 14 years, and in that time it's paid me £11,519 in share dividends. Don't forget there is capital growth on top of this. For the whole of 2023, my total return was 9.6%. And despite recent volatility in the market, my total return for 2024 at the time of this video is 14.3%. But be warned, investing carries risk. There is no guarantee that a company will continue to pay a dividend or that share prices will rise. Now for all my buys and sells, and all I ask in return is a quick tap of that like button, as it really helps out the channel. Let's kick off with a purchase of AstraZeneca. In order to fund my National Grid rights issue, I sold 25 AstraZeneca shares a while ago. So this month I've bought back 15 shares in the company. Still 10 more to go. In the last week or so, the price of Diageo shares fell sharply because of poor sales. I've got faith in this global giant, so I jumped in on the dip and bought more shares. I just can't see Guinness going out of fashion anytime soon. I've continued to buy more of my S&P 500 ETF. The ticker code for this one is IUSA, and it gives me exposure to all those big American giants all in one share. ETFs were not mainstream when I started this portfolio, and I couldn't even buy individual overseas shares on my Barclays platform until around 2 years ago. I've also bought more of my Vanguard All World ETF, ticker code VWRL. And finally, because of some research I did for my last video, I was so impressed with VEVE that I'm starting to pile into it. To see what VEVE is and why I'm so excited about it, then click this video here. To see details of my complete portfolio and how it's performing, then click this video here.